So, Tesla and Palantir have both fallen significantly from their recent all-time highs that they just hit, and the bears are starting to come out. And I gotta say, some of them have a point, although in typical bear fashion, there's some things that are absolutely BS as well. So let's talk about why these stocks specifically have fallen, what exactly the bear narratives are, separate truth from fiction with all this. And you guys know, Wall Street always has an opinion on this, and sometimes there's some truth, but there's a lot of garbage in there as well. And that's exactly what we do on this channel. The truth without the hype, that's what you're going to get today. We're going to separate it all. So make sure you like the video and subscribe to this channel if you like getting the truth without the hype, because that's exactly what you get every single time here, guys. I understand a lot of you guys don't always agree with my takes, especially when it comes to Tesla there, but that's okay. At least you know you're getting a truthful take, not somebody who has some sort of a bear position over here or a short over here, whatever the case is. You guys are just getting an honest opinion from somebody who has over 25 years investing in the stock market. And I'm trying to today break down exactly what Wall Street is telling you, which we all know that is complete garbage, but there is some truth in there as well. So let's kind of separate them out so that way you can take that from this.
Small caps getting hit this morning. Russell's down more than 1%. Big tech's trying to hold on for the ride. NASDAQ flat right now, and Tesla helping as it's not negative. Positive by a couple bucks. Tom's looking at the options. Dan Kern joins us from Nixon Peabody Trust Company, Chief Investment Officer, with some thoughts here on the pullback that we've gotten over the last week or so. Dan, is this overdue, or should we be eyeing more downside in some of these high flyers like Tesla?
I think with Tesla, it's definitely an overdue pullback. We saw a big post-election rally there, which I think was based more on sentiment than fundamentals.
Yeah, I mean, we'll start right there. He starts off with Tesla. We'll talk about Palantir. He also talks about them as well. It's kind of all intermixed together here. But I can't argue. We've been waiting for a pullback there. It has once again gotten ahead of itself. Now, not, it's despite the fact the price got ahead of the 2021 price, not 2021 ahead of itself in terms of earnings and there being fundamentals there. But are they ahead of the fundamentals once again? Yeah, absolutely. Can't argue there. Absolutely. This is good for the stock. I don't understand why folks continue to just think up, 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 to the moon forever is a good thing for your stocks. It destroys you over the long run, and it puts you in a terrible, terrible spot over the course of the long run when that sort of stuff happens, and creates a lot of other issues with the stock. So this right here is a very healthy pullback. Obviously, I hope it continues because I'd love to add more shares. But nonetheless, we got earnings coming up here. We got a lot of other things coming up, guidance for next year that are going to kind of dictate what's going to happen with the stock itself. And more importantly, are we going to see the fundamentals catch up to the price, or are we going to see the price continue to fall back down to the fundamentals there? That's kind of what I'm looking for out of this next earnings call, which of course we'll talk about as we get a little bit closer to it.
We're still in the place of an I want to believe kind of valuation. It's a really expensive for a car company. And there's the open question about how much AI and autonomous optionality is worth. And we really need to see whether it's...
Okay, now I know everybody's going to jump all over them for saying it's a car company. I agree. It is more than a car company. However, I will say that right now the cars make up the vast majority of the revenue. All right, so that's kind of out of the way there. I agree it is more than a car company. But everybody trying to figure out what AI, autonomous driving, robo-taxi, all these other things, what it's actually worth, what the market will actually pay for it, nobody knows. We aren't there yet. This is part of the problem with trying to project forward things that are new and never known. We don't know if the market's going to be massive, or is it going to be very minimal, or is it going to be something that's massive 20 years from now versus 2 years from now. We don't know any of those sorts of things. And that right there is kind of when you get into what our investors, when we're talking about stocks, as a consumer, you can get excited, you can be optimistic. When you're talking about stocks, in the end, it comes down to what do large institutional investors think? Not what you and I think as retail. Retail run is over with in regards to Tesla, in regards to the price that we're able to push it up to. We can't push the price to 1,200, guys. I'm sorry. That's going to take institutional money. And I can tell you guys right now, institutional money is not going to pay for something that is not defined yet and won't be defined maybe for a decade, maybe longer. We don't know. But they're going to wait for more clarity. Now you're right. You guys are right. Wall Street's always ahead. They might not wait until it's fully there and earnings are fully exploding, but they're going to wait until there is some earnings, some data that they can go off of. They're not just going to go, oh, well, Elon estimated at this, and we totally believe Elon's estimate. So that's right. There's what we're going to put onto it and go ahead and pay for it right now. It is simply not true. People told me that in 2021. I was like, you guys are out of your mind. It's not going to be what's happened. And that's exactly what didn't happen. Instead, the stock price went the exact opposite way. Now, of course, the fundamentals have all improved since then, which is nice, which is why institutions have started buying the stock again. But to think that they're just going to push this to some new astronomical price next year and $1,200 is in the realm of possibility, if we don't have fundamentals catch up with that, is just simply not true. And that's where a lot of times you've got to disconnect your feelings or your thoughts or your excitement and enthusiasm for a stock from the actual reality of Tesla's not a small cap anymore. It's not a mid cap. You're not going to get those style runs, although Tesla is wild. It does get crazy runs. But you need to be more realistic with, if I want a sustained run in Tesla, what do those large institutional investors want? And they're looking at this stock very, very differently than the vast majority of us as retail is looking at this stock.
Products or tangible, visible progress on AI and robotics before we can really believe in the valuation and see a path towards the fundamentals aligning with the sentiment.
What kind of valuation?
There you go. I like the word path there. Maybe that's what I should have said prior. I apologize. It's kind of like you don't know when a stock's going to turn profitable, right? But they give you a path to profitability, and you can logically work through the earnings and see, okay, I see exactly how they get there. Right now, we have none of that with autonomy. We have none of that with the robotic, obviously Tesla bot, Optimus, all those things like that. There is not an actual, hey, here's the path to it here. And I can see it quarter after quarter after quarter getting itself there. We're not even close to that yet with any of that sort of thing. And I think that's kind of what he's trying to say. Now, of course, I think he still views it as more of a car company. And so obviously, I think that kind of skews him more that direction. I think that's just kind of Wall Streeters who try to put things into boxes. And they just, obviously Tesla doesn't really fit in a traditional box, obviously, clearly. But that's kind of where he gets himself stuck and gets himself in trouble. In some cases, doesn't understand what he's looking at there. But it doesn't mean everything he's saying is bogus either, just simply because that's the box he chooses to put Tesla in for now. And if you wanted to argue which box it should go into, if you're going to put things into boxes, I'm not saying that you should judge each stock individually, each company individually. But if you're going to put them into a box, car companies where it clearly has to go, because that makes up 80+% of the revenue right there for now. Obviously in the future, that's going to be different, but for now, that right there is where you got to put it. So I don't know. It's just kind of one of those things. I think that's kind of where the disconnect is in regards to Wall Street versus us over here as retail investors.
You think makes more sense for Tesla? Where might this be fair in your mind?
Well, I think I'd like to see a PE that's in double digit.
That's a good answer.
So if you
can't tell if that guy was being sarcastic when he was laughing or not, I don't know. You can't see his face, so I can't tell what what his emotions were at that particular point in time. Nonetheless, I got to agree with him here. If Tesla was in a PE in the double digit range, whether you want to put that at 60 or 80 or 40 or wherever you want to place that at, again, there's a lot of different. I can tell you right there exactly where it's kind of been averaging once we got rid of that ridiculous run in 2021. But nonetheless, you want to put it right up in there. I'm going to have to agree with that. I'm going to say he's not off base. He's not one of the idiots trying to say, well, GM trades at a PE of 8, so maybe if I give Tesla a little bit of premium because they're really profitable, I give them a 15 maybe. He's not doing that sort of stuff. He just said double digits, which could mean an 80. Maybe he feels that's more reasonable. A 60, a 40, somewhere right up in there. Those are all very, very reasonable to me, and I can make a reasonable case for each one of those. You start getting above that, and I know there's lots of folks here on YouTube and other places saying, oh yeah, Wall Street always pays for a PE of 200 for a company like Tesla. And I'm like, no, they don't. Name me the mega cap where they pay that consistently over time without seeing a significant either increase in fundamentals or a drop in stock price after a stock has hit that particular metric or hit that particular valuation and not had it reset down one way or another. It doesn't exist. Look at all the mega caps. Sure, you can pull up a small cap or a mid cap and find those all day long. We're not talking about that kind of money. And you got to understand investments change as they grow over time. You can't judge a small cap the same exact way you judge a mega cap. More importantly, the investors that can move the stock price are totally different in those two ranges right there. So you got to kind of keep those sort of things in mind. So that right there, I really can't say he's being that unreasonable as a Wall Street guy. Now, if he said that and he meant 10, okay, then he's being an idiot. But in this case, he just said double digits, and I can't disagree. When you start hitting triple digit In terms of PE, stocks are overvalued, especially a stock like Tesla that's coming off a year where growth was essentially flat. We finally saw the margins bottom and starting to come back there, but they haven't come all the way back to the levels they were previous years. So it's a very, very reasonable assumption there given what he said.
Look at Tesla compared to auto companies, and I'm very clear that Tesla brings some substantial advantages to legacy auto companies. But when I look at the GMs and the Fords of the world, Tesla's valuation is greater than the two of them put together. There's real positives there: compelling product design, cutting edge technology, a differentiated business model. But the economics aren't playing out right now in the auto business. There's an awful lot of competition from China. There is lackluster EV demand in the U.S., and we've seen promises and exciting things on the autonomous vehicle front, but it's not monetized yet, and we don't see a clear path to monetization yet.
All right. So again, this is where we've got to, as investors, we've got to dig out the nuggets of gold out of the junk. He started off talking about and basically comparing it to legacy auto. We all know that that's silly. We all know that you shouldn't do that. But is it fair to compare it to a Microsoft if you want to pull it out of the car category? Is it fair to pull it out of that and start comparing it in terms of valuation, other things like that, to other big tech, other mega cap companies? I do think that that's fair. And when you start looking at those companies, you start to see that the valuation in regards to Tesla is extremely stretched. It should not command a higher valuation than what NVIDIA has been putting up lately in terms of growth rates, everything else in regards to that. But yet Tesla is at that stage doing that. So that right there is kind of where he was correct in what he was saying, but because he's hanging on to that legacy auto thing, us as retail investors, sometimes we tune it out and then we ignore the good things that he said. Like, hey, autonomous has a lot of promise, but we don't see a path to profitability with it yet. Or not a path to profitability, excuse me. We don't have a clear path to what those earnings and what that's going to look like in terms of numbers. Not even a projected path. We have no clue. It is completely blank. It could be a total bust. It could be the greatest thing ever, the greatest thing in terms of human history. We don't know yet. And that right there is a great point that he's trying to point out in terms of when we're starting to try to figure out how do we price the sucker, we just need more information. We need to be closer, more importantly, in regards to getting there. And again, every year I have the same exact argument with everybody here on it's next year. Look, FSD version 10 was the game changer, game breaking, whatever. Okay, cool. Now we're on 13 and the people are using the same exact words to describe 13 that they use to describe 12, to describe 11, to describe 10. At some point in time, it falls flat. It just comes down to talk to me whenever it's ready. And we're actually able to start seeing regulatory approvals, not in 1 city, 2 cities, 5 cities, 10 cities, like across the board approvals. At that stage, then I think you can start making some more reasonable projections that yes, it is here now. It is tangible. Again, there was people saying it was here when it was like version 6, which I had actual experience way back then with the Tesla vehicle in terms of the full self-driving. That it was amazing. It was the coolest thing I've ever seen. It was even able to navigate cones. It was ridiculous. I was like, what the heck? Like, this is the future. But that was version 6. How many more versions are we up to now? And how many years ago was that? And we still aren't all the way there yet, where it's a viable thing that is bringing revenue and, more importantly, profits to the bottom line. We just aren't there yet. It's going to get there, guys. It's just going to take more time than we think. And we got to kind of keep that in mind. And I can't poo-poo all over this guy I can poo-poo all over his, cross comparison to GM and Ford combined and all other sort of stuff like that. But I can't poo-poo on everything that he said because there was some truth and some actual value and little nuggets in regards to what he said right there.
This is a stock I really would like to believe in, and I will hear from Tesla bulls after this segment, but it's not there yet, as far as I'm concerned.
You will. This guy doesn't know what he's talking about. In the comments, get ready. Hey.
Yeah, I will too. I can't wait for my comment section there, but hey, Is what it is.
Real quick, Dan, very different companies, but they do share some similarities, not just an upward price action, but I think some of the policy implications too, where the market basically just said, all right, Palantir is going to get every new contract going forward in the new administration. But they also do have like major financial positive inflection over the last year and a half as well. I mean, it still is a very expensive stock too, but does that inflection of growth give it any more stability than Tesla?
Yeah, Palantir is a classic example of a company that I really love, but don't love the stock today. They are really well positioned in the AI space. They do a
Just so you guys are aware, when you hear something like that, that is more the, how do I call him? He's a trader, clearly, Wall Street guy. They don't just buy and hold great stocks for the long run like we do, even though statistically that's proven to outperform any other hedge fund, any other strategy, day trading, swing trading, whatever the case is. Statistically proven by hedge funds, actually, that beats everything. That's why dead people outperform traders and everybody else. But these guys can't make money if they don't get in and out of the stock. So what he said there, kind of in Wall Street code, was, this is an incredible company. I just can't hold it right now because I need to get in and out of this stock. I can't afford to ride the ups and the downs with this stock as it goes, like a long-term buy and hold investor can, even though he believes, and what he means by that is, it's going to make us a lot more money over the long run. I believe that too as an investor if Palantir continues to execute, which I see no reason why they wouldn't. If they continue to execute, I am going to make a whole lot of money, but he's telling you right there, traders are going to trade it down because of valuation, because of it having an incredible run, and just basically they need to take profits. They need it to come back down to a more reasonable valuation so that a way they can draw on more institutional ownership again and continue that trend up over time. So that right there is kind of Wall Street speak for, hey, love the company, gonna be huge long term, don't love the stock right now because I can't make any money on the stock right now. That's his problem. And by make money, he means take a profit so then he can take his percentage and show his clients that he's making money. Oh, and by the way, whenever he has a losing trade, they don't give the money back. They still charge their fee and everything else in regards to that. And he just doesn't get the additional fee on top of the original fee in regards to his fund. So that right there is kind of what they're discussing and kind of what he's saying with that.
great job with data integration and analytics. They've got, I think, really strong and innovative management. And we're early days. This is, I think, a long-term winner, but the market needs to digest what's happened with the stock. We've got a nice growth rate, but the stock's up more than 300% over 52 weeks.
Now, although I agree valuation is stretched right now on Palantir by a lot, I don't care whether or not a stock's up 300% or not. Remember, always keep this in mind. Wall Streeters think this way. Oh, it's up 300% this year. Well, we got to take profits. That's up so astronomical. We got to take profits. As a long-term buy and hold investor, we saw 300% gains, and let's just take Meta for example. It went from 80 to what would a 300% gain be? What, 160? 240, whatever the case was. Man, guess what? Still undervalued. Still had a lot more room to run, as has been shown since then with the Meta, being around $600 or so. So that right there means zero to me in regards to the run. Palantir going from 7 to 21. Yeah, a great run. Guess what? Had a lot more to go in it because you needed to pay attention to valuation, and that was just like a year and a half ago or so, maybe a little bit more than that now, maybe a year and 8 months or so ago, that you were able to see that sort of a move up in Palantir. And at that stage, it was still undervalued as it came into next year. So being up 300% doesn't mean anything to me. I need to look at valuation. That's why I always say valuation, valuation, valuation. Otherwise, you're thinking like a hedge fund guy. And that right there is how you end up losing over the long run. You end up selling. You feel really good in the short term. You're probably right for about 6 months or so. But over the long run, you end up being wrong if you aren't doing valuations there. And so that right there is just kind of more hedge fund speak.
The growth rate doesn't justify the level of the stock price. But I think long term, Palantir is a stock very much worth watching.
All right. Rationed, reasonable thoughts. Thank you, Dan Kern. Appreciate it.
All right. So we'll go ahead and stop the video right there. And he told us the answer to the question right there. Basically, hey, Palantir is going to be a great stock, just not one that he can get behind in terms of his trade right now. Got it. Totally makes sense. We just explained that. I don't think there's anybody out there arguing that Palantir isn't hot and that a pullback isn't going to be healthy for the stock. Now, how far does it pull back? How far does Tesla pull back as well? That's kind of what everybody's trying to guess right now. And guys, I can't emphasize this enough. The answer to that question, the very clear, definitive answer to that question is nobody freaking knows. If people know it, people guess all the time. I agree out there. But there's a lot of folks out there in YouTube land that were guessing the stock market, the macro, the everything. And they literally didn't make money last year. They lost money last year. 2024 was a negative or a flat year for a lot of those folks, or a 10% year. It was just crazy. I don't even know how that's possible during that sort of time, except for I've been in the market long enough to know people that think that they know and that they can time the market always lose. How has that worked out for you over the long run, especially with Palantir? Because we saw disaster after disaster after disaster with trading Palantir, and we've seen it repeatedly with Tesla as well. That's why I don't sit here and I don't try to make a lot of predictions on where stocks are going. What I do try to do is tell you guys where the valuations are for both stocks. And for both stocks, repeatedly, as we've discussed valuation, we have been correct on our valuations. We have avoided buying at higher prices, and we have instead loaded the boat whenever they were lower. Not by any magic, not because I knew where the stock was going, but just simply because we used valuation. That is why that is so important. Now, what we have coming up right here, the next important part for both of these stocks is earnings. We have earnings season coming up, and it's the first quarter of the year here, kind of beginning of the year here. So they're going to give us guidance for the rest of 2025. That is going to tell me what the new valuation target will be for Tesla, what the new valuation target for Palantir will be, and I'll be able to get much more refined with that answer. But that is all going to be based upon earnings, what the company puts out there as guidance, and then using that to help me formulate that. It is not going to be based on what Wall Street says or what these idiots on CNBC or, Schwab Network or whatever, what people say on YouTube or anything else like that. It's not going to be based upon hype. It's not going to be based upon something that might be here 2 years from now, might be here 10 years from now, might be here never. Not going to be based on any of that sort of stuff. It's going to be based upon fundamentals and what the company tells me is going to happen over the next year or two for that particular company, what growth rates are going to be, what they expect to see and everything else. And then at that stage, I can put a much more reasonable valuation on it and truly be able to see how overvalued are we in regards to both of these stocks. And then of course, vice versa, be able to exactly look at, okay, when do I want to start buying again? Now that is, if you don't know how to do that, then I understand that valuation is extremely hard. Then just simply DCA into both of these stocks. If you believe in these stocks, your due diligence has told you these are great companies, I want to own them long term, then just DCA. Statistically, it is incredibly hard to beat a DCA. You're definitely going to beat all the market timers. That's not even a question. The S&P beats all the market timers. You don't even need to get something like Palantir or Tesla in order to, or own those stocks individually in order to beat the traders and all the idiots trying to time everything. Don't even need to do that. All you need to do is simply DCA into great companies over the long run, and they will take care of you. They will eventually, if it's a great company, give you a 10x at some point in time in the future. When? Nobody freaking knows. It might be 2 years from now. It could be next year. It could be 10 years from now. Who freaking knows? Nobody knows. In the end, just stick to your solid fundamentals. Don't fall for a lot of the narratives, both bull and bear, and basically stick to your plan as an investor. And if you don't know how to do any of that, you want to learn how to do evaluation, learn how to create price targets, create a plan, create goals, everything else for you, check out the pinned comment down there. I may have left something special for everybody that decided to stay this long to join my group where we teach exactly that. We got free coaching, free courses, all kinds of best 6, 7, 8 figure Discord out there helping you out. We got live streams going on all the time where you can ask me anything you want. You can ask me in the group. You can jump into my DMs and ask me. All kinds of ways to get answers and to learn how to do this. So check out the pinned comment if you think a membership's right for you. And click this video here if you want to see exactly what I'm buying in this market. And click here to see my exact plan for this market. So thanks for watching, and we'll see you in the next one.